Hi guys, welcome back. So let's start at the beginning. We went over this in the last video. So the beginning of the master budget is the sales budget. So we're going to talk about that one in more depth. Sales budget. So the sales budget, it is derived from the sales forecast. The sales forecast is a larger document or calculation. It looks at the entire industry, and then we kind of compare based on what new products we have launching, any marketing campaigns, right? So we're going to derive it from the sales forecast. It's usually delivered, the information is usually delivered by the marketing department or product planning department, right? So we are not the original source for the sales budget because we don't have all the information. We don't know how many new products we'll be launching this year. That's going to come from our product planning department. We don't know the marketing campaigns that are going to help us, expand and reach new markets. So we don't have that information. So therefore, in a large company, the sales forecast is usually given to us by the marketing department, the sales department, or the product planning department. Sales department. So they're going to give us the information. We'll then take that information and put it into a format, a sales budget format. And then another point I wanted to bring up for the sales budget, it is the starting point, obviously, for the entire budget, starting point. And it sets the level of activity, for all subsequent budgets. So if I was to ask you in a multiple choice question, what is the starting point for the master budget? You would say the sales budget, okay? Because once we know how many units we expect to sell, we know how many we need to produce, we know the materials, the labor, and the overhead to meet that level of production, etc., etc. So it drives all the other budgets that are involved. Okay, so those are some key notes about the sales budget. As I mentioned, we will get the raw data from the sales department, product planning, or marketing, depending on how the company is structured. We will then take that to calculate our total expected sales. How are we going to calculate that? Just by taking our projected unit sales, so it's calculated by taking our projected unit sales, and we will multiply that, sales, and multiply it by the projected or estimated sales price per unit. You remember that abbreviation from a few chapters ago? Okay, so the raw data, the projected unit sales, that comes to us. The projected sales price per unit also comes to us. All we're doing is the math and putting it into a nice report format. So what does that format look like? Well, we have to have a 3-line header, of course. Company name, sales budget, and just like the income statement, because remember these are all operating budgets that lead to the income statement, your format for the date will be for the year ended. And we'll say December 31st, 2020. Okay, we usually separate it out by quarters, and then we have a total column. So we'll do quarter 1, Q1 column, a Q2, Q3, you know how quarters work, there's 4 quarters, and then the total column. Okay, so what do we label each one of these rows? So we're going to have our projected unit sales. Your book calls it expected sales. Same thing, right? Expected sales, projected sales, estimated sales, expected sales. And make sure that you list this in units. So maybe I will write that here. Oh, you can't see it. Make sure that you list that in units. Oh, that was terrible. Okay. All right, so we'll put the units and then the total at the very last column. Sorry, I don't know what happened to that line. And we said we're going to then multiply it by our estimated sales price per unit. So, sales price. And again, that's per unit. Per unit. So these are just kind of your notes, so you know what goes there. All right. We're going to multiply the two to get our total expected sales revenue. Okay, so it's not that bad. Out of all the budgets, the sales budget is the easiest. Look at that, just 3 lines. How many units do we think we're going to sell? And at what price per unit? That gives us our total estimated sales revenue. Easy peasy. Let me show you a nicer version of the sales budget. This one's from your book. This is for their company Big Bad Bikes, which sells a stationary bike stand because that's a thing apparently. So it's supposed to be a bike stand that you put under your bike that lets you ride your bike just staying in place. So they're a bike manufacturer. They saw an opportunity to go into the stationary bike market to probably compete with like Peloton as a cheap alternative, right? So as best as I could find, it looks something like that in case you want a reference. So you clip in your bike wheels and then you can just spin without actually going anywhere. So they're going to be selling theirs. They're anticipating to charge a sales price of $70, which is pretty much on line with what I found, $69.99. So they're going to charge $70 per stationary bike stand, and then in Q3 they're going to increase the price up to $75. From the marketing department, they think they're going to sell 1,000 units in Q1, 1,000 in Q2, 1,500, etc., etc. And you just multiply down. Easy peasy. Add across. You'll notice in the total column, you add across the units and the total dollars, but not necessarily the sales price per unit, because in this case it changed, right? If it didn't change, sure, you could put it per unit, but here it changed throughout the year. All right, so that's a little bit of background on what the sales budget is, what the format looks like, and then you got to see a pretty one out of your book.